Hi there, welcome back to Dukascopy TV. I'm Ben Jones. Malaysian GDP has been released today, so on the line I have Jeff Ung from Standard Chartered to analyse this data and discuss the impact of a weakening Chinese economy. So Jeff, we've seen Malaysian GDP shoot up to 6.2% on an annual basis. Further growth was predicted, but is a figure this high along the lines of what you're expecting, and what is contributing to this growth?
I think overall the print was higher than what we expected as well as what the consensus expected. While I think most of us expected that external demand is likely to have been supportive of growth in Q1, I think what surprised most of the consensus expectations was that the domestic economy was better than expected. So we saw like investment growth as well as the construction growth actually coming in quite strongly. So I think overall, in terms of our outlook, I think we still remain optimistic of steady growth in the Malaysian economy.
Now, there's been a lot of talk about a slowdown in China recently, but the latest data shows an increase in imports and exports. How is the Malaysian economy being affected by the current situation in Asia's largest economy?
I don't see any huge impact in terms of trade with China for now. If I look at the monthly trade data, in fact, Malaysian exports with China, I think, has been positive, although it's not like growing at double digits. I think overall for Malaysia's trade, as well as for its exports, I think we continue to see a lot of upsides, including from the demand from the more advanced economies such as the US, Europe, and Japan. So I think overall, the numbers from China have not significantly impacted that of Malaysia for now.
And finally, Malaysia relies a lot on its palm oil exports. Are these expected to be damaged by El Nino? And how will this affect the economy?
In terms of the El Nino impact for Malaysia, I think it's still too early to say for now, but we did explore and we find that Malaysia is less affected in Asia comparatively to other economies. I think in Asia we see Vietnam, China as well as Indonesia as being the most vulnerable. I think the higher food inflation that could be caused by the El Nino impact could be mitigated by government subsidies that's been in place. So that could actually cause a higher subsidy bill for the government. But in terms of it as being a food exporter, the rising prices could actually boost the agriculture sector if they manage to still produce a significant sum of the agriculture.
Jeff, thank you very much for talking to us today. That's all from me for today and for this week. Thanks for watching, and keep clicking back to Dukascopy TV for plenty more updates and exclusive interviews. Later on, Monica Gibson will be bringing you an interview looking at the Czech Republic. But for now, goodbye.